Here's a quick pulse check on FAANG stocks, or yes, I should say MANG these days. Now, if you're new here, I'm Hema Reddy, and I use price, time, and momentum to boost my trading and that of my tribes. So I have price action plotted here in candlesticks. I have my favorite momentum indicator, the RSI power zones, down below. So you can see that Meta has been recovering higher after posting a low in mid-August. And most recently, it's consolidating, meaning kind of just going sideways. Based on the behavior of the candlesticks and the RSI power zones, I think it's likely to continue higher. The first barrier it would have to climb is 309.84. Then it would have to get above 318.41 to reach the recent high at 326.20. So again, more likely to break higher than lower based on what I'm seeing here, and those are the resistance levels to monitor. All right, let's take a look at Apple. Now, Apple has been weakening in part fueled by the reports that China was restricting iPhone use. Then Apple had its meeting, has released its new iPhone, and here we are on the charts. Now, I want you to look back at this big run-up that started at the beginning of the year, and you can see that there's been a shift in the momentum. On the RSI power zones, we are now capping in the bear resistance power zone, so it looks like the momentum wants to get back to the bear support power zone. There's also forecasting that we can deploy here, so I'm going to do that real quick and jump back. All right, so Apple is looking like it's going to be heading lower for some time, potentially into October 4th, towards this 50% retracement of the move from the early year low, so 161.20. There are other support levels surrounding it that create a cluster, so that's a selection of 3 or more support levels, so keep an eye on it. What would change my mind about Apple going down in the short term? Well, at the bare minimum, it would be a return above this doji candlestick high at 180.24, 180.30, and this whole region here. So you can see that the 180.30 is the highest level that was preceded by the doji candlestick. Got to get above that before there's any chance of getting back into that 195 to 200 range. All right, let's check out Amazon. Now on Amazon, I had very recently put out a buy recommendation to my Trifecta Trading Club members and gave all the parameters, the stop, the initial targets, and more. And so far, that is playing out really nicely. Today, we actually had a break finally above the August 4th high. And the way that the candlesticks are shaping up, these nano large green candles, you can see a few of them here. That term nano is in my Gann candlesticks training, and it's my unique Gann-based twist to candlesticks. So all of this is suggesting further upside, roughly towards 150 to begin with. What would change my mind about the likelihood of further upside would be if there was a relapse beneath this low right here at 133.16. All right, moving on to Netflix. So Netflix, I had made a buy recommendation for it back on August 28th, which played out. That was after a previous sell recommendation for this move lower. And now Netflix is lower once again. So I'm going to take off this old trade recommendation to kind of clear the chart and evaluate. So it's had a bit choppier move than the chart we just looked at of Apple. It's been steadily, well, not steadily, but it's been higher over the year, but like I said, with volatile swings. And right now it's coming back into a key support area. If it continues beneath 406.17, then that would concern me for a deeper setback, potentially into the 350 to 360 area. If bears are able to get back above this old bottom, back at 436.70 in the short term, then that would tell me that the bullish energy is likely to take over. But right now, it looks like bears are still in control. Again, if they get below 406.17, then there would be more of a chance of getting down to the 350 to 360 level over time, over the next few weeks. Okay, last but not least is Google. Google, just like the others, has been in an uptrend since the beginning of the year, but it has slowed down and been choppier than some of the other FAANG stocks. Right now, you can see it's consolidating between this doji high, happens to be a gravestone doji, and right now it's just kind of going sideways. So the impact of that bearish doji candlestick has come and gone, right? We had to move lower into September 7th, and now it's just going sideways. So it's pretty straightforward here. I'd want to see a break above the recent high 138 for the next move higher. Now, I'm not saying that I would want to buy or add shares at 138 or above. If you're going to buy, it's safer to buy on pullbacks, and that's what I often implement in the stock picks I recommend, whether it's in the Skinny on the Markets or in my Trifecta Trading Club, all right? I'm not a big fan of buying on the breakout unless you can put the stop really close. I'm just saying that if it gets above 138, we're more likely on our way to the 145 to 150 area. Meanwhile, if it instead actually relapses below this consolidation, so 132.95, then I would watch for a return to what's pretty good support at the 129 area. There's a few prior closes of that area, and it's also based on price low support. So I teach 3 kinds of lows: swing, price with a capital P, and bar. And those are in my early ebooks and my early parts of all my courses as well. So there you have it. That was a quick look at 5 FAANG stocks. Like I said, I should call it MANG. I know it's going to take some getting used to. Hope it was helpful, and I'll catch you next time.